Good afternoon, all founders. Welcome to joining us today. I'm so happy to have a chance to kickstart my first lecture. Today we are going to cover a couple important concepts to evaluate your business and get ready for fundraising. And my name is Alan Lam, and Managing Partner and CTO of Gravity Capital Partners. Section 1, we are going to talk about the business evaluation. So, as all of you are the founders of your company or the top management of your company, and what do you think about your business? How to evaluate your business? Do you have any concept? What is your stage of your startup? Is your company a startup stage, or scale-up stage, or mature stage? What is the stage of your company? If you think your company is startup, please raise up your hand. Okay, about most likely 90%, okay? What about scale-up? Anybody think your company is in scale-up? Okay, some of you. What about mature? Do you think your company is mature business? Do you know what is the definition? If you know, please raise up your hand. Okay, one. So I will give you my definition, okay? So as you can see in the screen, basically I just simply define 3 points, okay? The first point is about first dollar point, okay? If your company already launched your product or service, you receive your customer to pay first dollar, and that you have already reached the first dollar point, okay? The second point is about break-even point. Have you ever heard break-even point? Okay, meaning that every month your income or your revenue is able to cover your expenses, okay, in and out of balance, okay? But as you all know that when you start your company, you need to have the seed money, either from your own pocket or from other people's support, okay? And that amount of money, we call it initial investment. So for the third point, it's about the return on investment point, meaning that when you receive when your company receives your investment, assume that, for example, $1 million, and then you do your business by burning this million, okay? And then you launch your product or you launch your service, and then you get the first dollar point because you receive orders, okay? And by receiving the order continuously, you find that the income and expenses can cancel out. That means you reach the break-even point. By passing the break-even point, actually, you are going to have continuously, you have the profit continuously, okay? Then this kind of profit, you are not going to, share to the shareholder at that moment. You need to keep it for the company operation. And by accumulating those profit, and then you will find that one day it reached $1 million. That means it's equal to your investment. And then when you allocate this $1 million, return back to the initial investor or your own pocket, and that means you reach the return on investment point, okay? After this point, all this kind of profit, we call it net profit, okay? Is that clear? Okay? So, what is your company stage? Think about it. And my definition of the previous stages, startup, scale up, and mature. And if we try to link up to these three important points, first dollar point, break-even point, return on investment point, then we will have a new definition of the stage, okay? My definition for the company status or stages is that before you have revenue, I mean before your first dollar point, I will call it startup stage. You just start, okay? You just start and then try to develop your product or service, okay? But once you complete your product and service development, you roll out your product, you roll out your service, and then you start getting orders. And that means you can earn money. Then you are entering, my definition, you are entering the scale-up period. You have chance to do something to accelerate the sales, okay? That means you can scale up the business by thinking of some innovative business model or replicate your business in terms of different places, expand in geographical location, okay, scale up, okay? Once you scale up, you speed up the profit-making process, getting a lot more revenue. Once you reach the return on investment stage or return on investment point, and then you recover all the investment. And between the break-even point to the return on investment point, and that I call mature period, okay? So that is how I define the company. Is that clear? Okay? So I don't ask you the question, but you can think, you don't need to answer me, but you think it for your company. Where is your company in? Okay? What is your company stage based on this definition? Okay? And then I'm going to talk about, as an investor point of view, which stages we want to invest. That is important, okay? When you decided to do fundraising, you need to understand the thinking or the logic of the investor, okay? If you understand the logic of investor, you will know that what time is a suitable time for you to do fundraising. If you know that your company is in the right timing to do fundraising, prepare for it. If you know that you still need some more time to grow your business, then you better focus on your business, okay? So that is the purpose of today's lecture. Do you get that? Okay? So, many people think about 0 to 1, 1 to 10, or 10 to 100, okay? Have you ever heard about 0 to 1? There are multiple people, they love to go to the bookstore and then they will find that 0 to 1, that book, okay? So if I plug in this kind of concept, 0 to 1 is the startup period, okay? From nothing to first dollar, okay? And from 1 to 10 is between the first dollar point to the break-even point, okay? So, and that is the scale-up period. You want to scale up faster, let your company to reach the break-even point, okay? And once you reach the break-even point, do you know what is the real meaning? The real meaning is that your company will not die, or that means your company can survive. But for sure, company always face ups and downs. Sometimes reach the break-even point, sometimes cannot. So what we want to say, which this break-even point means that you over this point continuously. If you just by getting one big order over the break-even point, and then next month you get no order. That is not a real break-even, okay? So you have to define it clearly. After the break-even point, after your company stabilize, okay, that means you don't worry about the survival, start getting the profit continuously, and then you will, between the break-even point and the return on investment point, that means it's a mature period, okay? Getting back your investment is just a matter of time, okay? So that people call it from 10 to 100 plus, okay? So try to sync up with different kind of, definition so that you know where you are and you know how to define your company. So if you are an investor, okay, tell me, which stage do you want to invest? Anybody can, maybe I don't have a free-flow question. So who would like to invest in startup stage? Please raise up your hand. Okay, 1, 2, 3, okay, some, couple, okay. Who would like to invest on scale-up stage? Okay, 1, 2, 3, 4, 5, okay, so many, okay, 50%, okay. Who would like to invest on mature or growing stage? Okay, oh, just some, okay. Some other people just, thinking, okay. Which stage is the lowest cost? Startup. Yeah, startup stage, most cost effective, right? What is the lowest risk stage? Growing. Mature. Yes, correct. So, but which stage has the significant increase in cost? Scale up. Okay. So then, all of you, all founders, you are pretty familiar with psychology. You know people how to think now, okay? When I give you the definition of those points, and then you can quickly own the mindset of investor, okay? But then, how they make the decision. Everybody know. In a startup stage, the cost is lowest, but the risk is the highest, okay? Everybody know that if the project is proven, the market accepted, it is the lowest risk. But for sure, the price is high, okay? So, after I explain this kind of situation, do you change your mind? Who would like to invest in the startup stage? Please raise up your hand. Okay, 1, okay? Who would like to invest in the scale-up period? Please raise up your hand. Okay, 40%, okay? Who would like to invest in the mature period? Please raise up your hand. Okay, 1, 2, okay. Other people still thinking, okay? So, but let me tell you, I pressed the wrong button. Let me tell you my philosophy, okay? My personal preference is that if the market is not proven, that means even the single dollar has not been received by the company, I cannot make decision. Just, to me, it's like gambling, okay? I'm not represent all the investor, but I just want to tell you my preference. So if your company is or has not yet reached the first dollar point, you are welcome to consult me for advice, but don't consult me for investment. Save your time, okay? I'll be frank, okay? And if the project is between the scale-up period or break-even point, Or even, I would like to give you more specific situation. If the project is close to the break-even point. I like that. And then I will try to think of how can I help the project. First, shorten the time to get break-even. Second is that if the transformation of the business, effective, and then try to shorten the time to reach the return on investment. Because although, if your company accept the investment from the investor, and that return on investment stage will extend, okay? But the key point is that the project, is it accepted by the market and then replicable or scalable? If that is the situation, and I think that is a good project, okay? To an investor, the risk is relatively low. So last seminar, I invite 3 of my portfolio company to share with you about their story, okay? Did you join last time? Please raise up your hand. Okay. 80% of you joined. Okay, so I don't need to repeat. But the key point is that gravity, like I mentioned to you last time, our philosophy is founder first. We respect founder, okay? And every time when we see all these founders, and then I would like to evaluate my own resources among Gravity's network and see how can we help the founders, okay? And so in this year, okay, I basically counting in January to now, or end of November, I met or I reviewed over 300 projects. And then I try to do a deeper evaluation, probably about 200, okay? So that means 2 over 3 of those projects, I review it in detail. 1 over 3 projects that I just passed, okay? You know the reason now, okay? Because those projects did not reach the first dollar point, okay? So when the project is not reached the first dollar point, for the institutional investor, they cannot tell. They don't know. That means you ask them to do gambling, and you just waste your time, okay? And so I would suggest you, okay, if your company currently is startup stage, forget about institutional investor. But you can seek for angel investor or seed investor, okay? Because they are individual, the purpose is different. Because for institutional investor, do you know what is their expectation? Do you know that? Sorry? Increase the share value? Let me modify a little bit, is return. Okay? So institutional investor, because they have to earn money, okay? They care about return, okay? And if the company is not reach the first dollar point, and that means you ask them to do gambling, and they are not going to do. But for the seed investor or angel investor, the mindset is different, okay? What is the purpose for them? Do you know? Again, psychology, okay? What do you think about seed investor or angel investor? Like I did in many years. By the way, do you know my background? I started my first company called Central Limited since 2004. And then after 6 years, and then the business going well and stable, and then I pass the operation to my colleagues, and then I do community service. And I forgot the time, probably is 2012 that time, or 2011. I bought the restaurant in the Science Park. At that moment, anybody think that, Alan, are you crazy? You are innovation and technology field, but you are doing F&B. What's the point? And do you know where is the restaurant? It's under the Golden Egg, Come the Video, Italian restaurant. I was the co-owner for a couple of years. And that moment, over three and a half years, I always go there. A lot of people want me to invest. At that moment, I was the angel investor. And so, tell me, angel investor or seed investor, what kind of things that they are looking for?
They either care about the founders, so they invest in the people, or
Okay.
they like the technology, or very familiar with the technology, so they invest in the technology.
Yes. To conclude your point is that their interest, okay? Either they're interested in the team, interested on the technology, or interested on the project, okay? So, seed investor, angel investor, the investment exercise based on their interests, more personal, okay? As long as you make them happy or touching, and they'll do, okay? But for institutional investor, VC, even though they tell you that, hey, I'm not like that, but in fact they look at the return, okay? So if you make that clear, you will understand more about your fundraising strategy, okay? When you see different people, you know how to prepare, okay? So that is very important. I saw many founders, okay? They just prepare one single deck and then see hundreds of people. Some of them are seed investors, some of them are angel, some of them are VC. Single deck for everyone. 1 year later, 2 years later, still cannot close the deal. That is sad. And then after too long time, they are more focused on the fundraising, not really focused on the business, then close down, okay? So that's why after I become an institutional investor, I see a lot of people. I cannot just every day tell them this, it is too time consuming and it's too difficult. So that's why I decided to have support from Science Park with the super professional team here to do the video recording and invite everybody to come. And I would like to share with you this important message, okay? So I really want to do something for everyone, and I hope that you can understand more about their thinking, okay? So go back to this. If you are the investor, after my clear definition, what is your preference? For example, some risk taker, they will more, or some angel investor, they will be more rely on their feeling, rely on their interests. But at the same time, for some angel investor, they are more care about the return. For sure, later stage, they will be more interested, okay? So it means that review your current balance sheet or monthly income. You know that are you in a suitable time to do fundraising. Later stage, you can reach more kind or more types of investor. Earlier stage, start period, most likely you can reach the seed investor or some angel investor, okay? So think about it, okay? Here is my name card. I will not stop this screen, and you guys please feel free to take. And this is my personal mobile, okay? And you know, people send me an email. Frankly, I will not check. I have admin office to check, handle all my meeting schedule, all the email they will read. But this number, this WhatsApp is the only thing I will handle in person. Okay, I give you my best communication channel. So that's the end of today, and I hope you guys enjoy, and please feel free to mingle. Thank you. Thank you.